Hello friends, I've come back with another video on the stock market. So in this video we will go through what is stock analysis, what are different types of analysis, what are different types of stocks that we have, and an ideal condition for anybody to get into a stock. Okay. Before getting into the actual topics of the today I saw in one of the newspaper that somebody has been targeted for an online share trading, and then a fraud has been done. So please be cautious whenever you get into any of the WhatsApp discussions, or anybody sends you any link on the WhatsApp which is like an app or an APK. Please be sure to understand everything. So whatever I'm trying to share you or teach you in this videos will help you in overcoming all these things, and you will be master of your own entire money, and then how you manage the entire stock market and the investments here. Okay. So having said that, we will try to understand some basics on the stock selection. If you look at NSE and BSC, you will find around 5,000 stocks which are listed in the market and which are traded as on today. And there are some other stocks like SME stocks which are also traded, but it needs a lot of money, and the volume in that will be very less. So that's why we don't get into the SME stocks. We normally go into the mainstream stocks actually. Okay. And it is always good that we try to filter these stocks, whatever 5,000 stocks are there, because not all stocks are good ones, and not all stocks will move like an Infosys or Reliance or anything. So we need to identify some stocks which can become Reliance or Infosys in future by looking at the IPO data and some of the company related informations in that one. And we also need to understand how many stocks we can manage. So previously, maybe if you look at 10 to 15 years back, people used to say that you should have not more than 10 stocks in your portfolio. So the reason for that was, during that days we didn't had so much of data availability, and also it was very difficult if you had more number of stocks, because everything was done on paper. Okay. So you have to write it on paper and then keep a track of that. So now since you have the access to the computer, access to the data, so you can go more than 10. I manage 150 plus stocks in my portfolio. Okay, this is just for your information here. Okay. And basically there are two different types of analysis. If we look at, one is the fundamental and the second one is the technical analysis. Both has its own pros and cons. So during the course we'll understand what time we will use a fundamental analysis and what time we will use a technical analysis. Okay. So apart from these two, fundamental and technical analysis, you also have something called as economic news, which impacts these fundamental and technical analysis out here. So the economic news can be a change in the company management, a change, a ramp up or a ramp down in the overall management, CEOs or CFOs. If there is any change in the political parties, that also will impact. If there is any war happening somewhere at a distance, even though if we are not really connected to that one, but still it will affect us. Or if something is happening on the other side of the globe, like the real estate issue that happened in 2008, then also it will impact, because every stock is related to one or the other there. Okay. So having said that, we should understand what are the different types of stocks. In 2017, SEBI created a rule wherein the top 10 stocks are called as large cap stocks, and 101 to 250 are called as a mid cap, and then 251 onwards are called as a small cap. So if we look at in terms of the market capital, so any large cap company will be around 20,000 crore plus. Okay, and if it is a mid cap, it would be around 5,000 crore to 20,000 crore, and if it is a small cap, it will be less than 5,000 crore. Apart from these major categories, we also categorize them in terms of a growth stock. If the company is in a growth mode, let's say for example now the EV vehicles are more, and the companies related to this like Amar Raja or Everyday, they are investing more on the technologies to adapt to these batteries or long lasting batteries. So that means it's growth making companies, so these are called as a growth companies. IPO stocks are the ones which start their journey in the stock market by giving new shares. So that will be called as IPO stocks. And then you have a dividend stocks. There are some stocks which do not appreciate much, but they give regular dividends to their stakeholders. So those stocks are called as a dividend stocks. And there are blue chip stocks. So these are the companies which have established their entire growth in India, and also they have gone beyond India, like many of the IT stocks in India, or even Vedanta, we can mention it as HCL or Infosys, Wipro. All of them have grown in India, and then they have also grown outside India. So they are called as blue chip stocks. And you have penny stocks, like any stocks which has a current market price less than 20 is called as a penny stock, and it is advisable not to get into these penny stocks. Normally what happens whenever you open a demat account, and if you are a newbie, normally our psychology works like, I will buy a stock which is around 5 rupees, and if it goes and I'll invest, maybe I can put 1,000 stocks of that. So and if it increases by 1 rupee or 2 rupee, it increases in a magnitude of 1,000 or 2,000. But what happens to these things are, these are operator driven, and many times you will lose your money, and it will be just sitting in your portfolio. It will not help you in any manner. So keep away from these penny stocks basically. And last topic for today, like whenever you get into any of the stocks, so you check the overall graph for the 1 year. Okay, so normally whenever you click on any of the stock, it will show you for the first day or the last working day, the graph would be. Click on the 1 year graph, and then you will see the entire 1 year graph there, and your graph should be something like this. So when you come from the right hand side, and this is the present day that you are looking at, this, you should always see the stock low position first and then the high position out there. Okay, so the stock would have just crossed the or touched the low position, and it has moved up by 10 to 15%, and this is where we want to enter in, and this is where you can make money. When you enter here, the stock will have a potential to reach to the top year high, and then you can make money out of that one. So keep in view that this would be an ideal stock graph. We may not get exactly like this, but this should be the thought process for us to get into that one. Thank you for listening today. Keep learning, keep investing, and keep sharing. Thank you. Thanks a lot.